Hello everyone and welcome back to the channel. In today's video, we will be discussing about the insurance sector in India and how it plays an important role in a layman's life, while also discussing about the products available in the market. I will also be explaining about India's stand in terms of the global context, so I hope you find this video helpful. The insurance sector in India has been one of the most growing sectors which has witnessed fundamental changes. Earlier, it was a preconceived notion that insurance is a liability for the insurer as well as the insuree, but the COVID-19 pandemic has changed that notion. As we adapt and evolve, our joint families are turning into nuclear families, which increases the importance of having a safe and secure future for our families. The entire concept of insurance is to safeguard our future against casualties and not to earn profit from it. The majority of people tend to mix insurance and investment as it seems like killing two birds with one stone. However, it does not result into enjoying the benefits of either of them, as it does not provide a full coverage, nor does it provide significant returns on the investment. To begin with, we will also be discussing a few insurance options best suited for layman, as we usually lack awareness in these areas. All of these explained schemes are available under the employer-employee scheme, where the employer pays for the premium and the employee will enjoy the benefit of it. Under all of these schemes, the employer is also eligible for deductions for the amount paid as premium. India has a lot of families where the entire family is dependent on a sole earner, and there have been cases where the death of this person leaves the family stranded with little to no financial support. With increasing cost in the economy for basic necessities, it is extremely crucial to safeguard one's future, and a term plan is a part of the solution. In India, metro cities like Mumbai and Delhi are becoming more aware of the importance of term plans. However, that is not the case for the Tier 2 and Tier 3 cities. Professionals like doctors, engineers, advocates, and more on whom the entire family is dependent are still hesitant to opt for term plans. There have been many families who suffered the loss of their sole earner but were able to navigate their finances, as that person had term plan insurance which guaranteed a safety net for their family. A lot of families are hesitant when opting for term plans because the insuree does not get back the premium paid by them, and they often forget that the main motive of buying a term plan is not to earn profit out of it, but to build a safety net for their families in case of death of the insuree. Another important point I would like you to consider is that the coverage should be more than enough to make the family financially secure. As the world keeps evolving, we are constantly exposed to new and more deadlier diseases like cancer and COVID-19, to name a few. Diseases like these are often more deadly to a family's finances than their health, as it is very expensive to get these diseases properly treated. For the exact same reason, it is crucial to buy mediclaim so that we can cushion the blow of expensive treatments. On the bright side, people are getting more aware about how mediclaim can be beneficial, but there also have been many instances where people claim more money than they should, which ultimately leads to companies deciding to charge higher premiums on these plans. We have often heard about government employees being financially secured thanks to the pension received even after their retirement. However, people who are not government employees also need to have a fixed and secure source of income at a later stage of their life. This is a topic only a few people are aware of. Having a secure, regular source of income in the later stage of life is not only important but also essential in today's day and age. However, we are often blindsided by hefty returns that we often forget about the importance of safety along with a fixed stream of income. There is nothing wrong in taking risk, but one should always safeguard their situation before betting everything on risky investments. There are many private companies which have the option of pension plans, but one should always look for companies which have a strong market presence along with a good history with their customers. It is better to opt for companies with strong reputation rather than opting for companies which give a higher amount for pension. A few years ago, insurance seemed like a foreign concept to a lot of people, but we can definitely see that changing as we move forward. However, in comparison to developed countries, we are still in the initial stages of growth for this sector. India is the fifth largest life insurance market in the world's emerging insurance market and continues to grow at the rate of 32 to 34% every year. Insurance can be divided into two categories. Number one is life insurance and number two is non-life insurance. Vehicles and other commercial commodities are covered under non-life insurance. There are a total of 56 insurance companies, out of which 34 sell non-life insurance and the remaining 26 sell life insurance. As of 21-22, non-life insurance collected a total premium of Rs 2,24,002 crores, whereas life insurance collected a total premium of Rs 6,92,614 crores. And the total premium collection of India for the year 21-22 was Rs 9,16,617 crores. Another important point that I would like to share is the AUM, that is the assets under management of these companies, which stood at Rs 53.36 lakh crores, which collectively is more than the AUM of the entire mutual fund industry. These numbers might seem impressive, but when compared with the numbers of major economies, we can definitely say that this is only the beginning. As I mentioned before, India's insurance sector has immense potential to grow in the context of the global insurance market. We can also see that through the chart presented on the screen. India's total premium collection was about $125.57 billion, whereas that of the United States was 25 times more, that is $3,242.70 billion. France, being a smaller country than India, collected 3 times more, that is $362.25 billion. Now, if we talk about the AUM, India's AUM stood at $744.76 billion, whereas that of the United States was $7,810.60 billion, which was approximately 10 times more than that of India. The insurance sector in India has seen some major fundamental changes over the past couple of years. Economic parameters have changed drastically and aided in the insurance sector growing exponentially. If we continue on the same path, it can be said with certainty that this sector will gain more traction as we continue to grow as an economy. With that said, it would be really helpful if you could leave your thoughts and suggestions in the comment section or reach out to us via email, as we're always happy to take in your requests or suggestions. Thank you for watching and we'll see you in the next one.